How do we make the mortgage process faster, easier, and cheaper? That's the game, and that's what we really focus on. That's how we got here, and that's how we're going to get there.
What's up, guys? Welcome back to another video. And in today's video, we're going to be talking about ticker symbol GHIV, and that is United Wholesale Mortgage. So I figured since we have quite a few mergers coming up that people will be looking for their next big play to move into. So continuing the Spac series, we're still on the hunt for that next big play. Keep in mind, not all of these will be winners, but we won't know until we do our DD on them. So I'll try my best to get through this quickly and save you time doing loads of research. However, I will link everything below if you wanted to do additional research, which I always do suggest. As always, before we get into it, if you guys will please like and subscribe, it really helps out the channel, and you guys have shown me so much support over the past few weeks and months. It's very appreciated, and I can't thank you guys enough. Definitely check out the links in the description to the Discord, the SpacTracker, and some referral links to Robinhood and Webull. Everything is free. So check it out. Let's get into it. So United Wholesale Mortgage to become publicly traded through a business combination with Gores Holdings, the same holdings company that is helping Luminar go public as well. And both of these transactions will be closing in Q4 of 2020, which I thought was quite interesting. So this transaction value of $16.1 billion makes UWM the largest special purpose acquisition company transaction to date. This definitely strengthens UWM's position as the #1 wholesale mortgage lender and the #2 mortgage lender in the US. Proceeds will enable UWM to accelerate the implementation of its business plan, focused on providing superior services to its broker clients and capitalizing on growth opportunities. This transaction includes $425 million of cash from Gores Holdings and $500 million private placement anchored by top-tier institutional investors.
You're only going public once in your life, at least from my perspective, and so ride shotgun with the best in the business, and that's what Al Gores and his team was, and so we're excited about it. We think it's a great opportunity, and we're really hoping to really put fuel on the fire of our business.
So a bit about the company. They're headquartered in Pontiac, Michigan. UWM is the #1 wholesale lender in the nation 5 years in a row, providing state-of-the-art technology and unrivaled client service from the industry's leading account executives. This year, the company is on track to underwrite nearly $200 billion of mortgages, up from about $108 billion in 2019, amid record low interest rates as the U.S. Federal Reserve takes aggressive steps to cushion the economy from the effects of the pandemic. That, in turn, has catalyzed a surge in home buying and mortgage refinancing. The transaction will infuse UWM with up to $925 million, including $500 million from a private placement led by Mr. Gores and including big institutional investors. The money will be used to build the business and for transaction expenses. United Wholesale Mortgage is following a key competitor into the public markets, and that is Rocket Mortgage, the parent of Quicken Loans. They went public in August of 2020 through a traditional IPO, and we did see this thing spike up to the 30s and quickly come back down to the 20s. It was pretty much just a hype play. Now, this is to be considered one of their big competitors, and they clearly highlight this throughout their investor presentation and point out any sections that they beat them in. So although we're in a rough spot economically, I do have a strong outlook on the mortgage industry and home buying over the next couple of years. The Fed just recently stated that interest rates are going to stay near zero until the end of 2023, and prior to this, it was the end of 2022. So this is great for the refinancing front, and there's still a ton of refinancing volume to get through even after a record year in 2020. This also makes home buying more accessible with mortgages at a lower cost, which has its own macro and demographic tailwinds, so this should last for a couple of years. In my opinion, this won't hype up like EV SPACs do, but there is something real compelling here, and just the fact that this thing is huge kind of makes me interested in it. Something else to keep in mind is that CCXX is another huge SPAC, and there's still not much volume or price action behind it, so that is just something to be aware of. Not all of these SPACs just blow up and hype up like the EV ones do. So looking at the team, we already know a bit about the Gores team from our DD on Luminar, and we know, that's a pretty solid team and already good to go, but we need to look at the UWM team. I mainly look at the CEO. Now, this is the person who really decides the future and the direction of the company, and every great company has a great CEO. So, yeah, they threw out some bullet points about him, and I will throw those up right here. But I went a step further and tried to find out a bit more, so I headed over to their website to read his bio. So looking at his UWM bio, and now obviously they're not going to write a bad bio about him, but I just wanted to get a bit more info on him. A couple things that stood out to me have been highlighted, and the first one is that in 2003, Matt left the MSU basketball program to join the company his father founded, United Wholesale Mortgage, and he joined as the 12th member. So a positive in my eyes is that it's a family business, and I don't think he's going to let it fail. Now, some may say, he was given the business or he's given the position, the opportunity. He could just be, spoiled kid, whatever. If we keep going down the article or the bio, you can see some of his big accomplishments, and he really has proven himself. So, through his team-focused business approach, that enabled him to gain record-breaking wholesale market share and rapidly grow UWM into a leading lending operation. So that alone is a huge accomplishment. It took him 10 years to become the CEO, so his father didn't just hand him this position, he had to earn it. And he eventually got to move the company into a larger building to house their rapidly growing staff of 1,200 team members. Moving down a bit more, at the end of 2019, Matt and his now 4,700 person team set a new industry record of $107.7 billion in mortgage loan volume. A bit further down, today Matt is known as the most prominent advocate for mortgage brokers nationwide while promoting the wholesale channel on a national platform such as CNBC, Fox Business, Yahoo Finance, and Bloomberg TV. He has a couple different articles written about him: most influential mortgage professional under 40, 25 most connected mortgage professionals, rising star, and then a bit about giving back to the community. This might just be for good looks, but I figured I'd throw it in there. In 2015, he donated $500,000 to Michigan State University, and just a couple other things. This will be linked in the description as well, but I found a lot of positives in this, and I think, he sounds like a pretty good CEO to me.
I really believe that every loan's got to be a success story, and when they submit a loan to us, if it's not a success story, we failed as a company. I'd rather them not submit the loan to me. Even if the loan closes or doesn't close, I want them to walk away thinking UWM really is a great lender to work with. And then more important than them thinking that is that their borrowers have to think that their broker is an awesome place to look at because of UWM is a great lender.
So I watched this interview, and it included Alec Gores and Matt Ishbia, the CEO that we were just talking about. And something I noticed is that he is very adamant about retaining a very large stake in his company, and he's using this as a growth driver to supercharge the company's performance going forward. Now, if anything, I think this is viewed as a huge positive more than anything. You want a CEO to be heavily invested in the company because, that makes them work harder. That's a lot of their wealth in this company, so that's a positive in my eyes. So their reputation has definitely grown significantly in recent years. However, their financial growth has just been okay the last few years. They are growing year over year since 2018, which is a huge positive. Now, they are looking great compared to their peers, and they are net income positive, and they expect to keep this going. One thing that I didn't like is that the growth won't continue to beat out the previous year, and I thought that was interesting, and I thought about it a bit more. And net income will actually fall when the cycle abates in 2+ years and when rates go back up. Luckily, they will take advantage of this and will have made a good amount of money while the opportunity was there and interest rates were low. Now, something to keep in mind is that there's no need to rush into these SPACs. There are multiple times to buy into SPACs if you did want to wait, especially because this is a Q4 merger, likely, November or December if I had to just make a guess. Now, one thing to remember is that SPACs are liquidated if the merger were to fail, so your downside risk is actually capped. Also, warrants are pretty cheap right now, and that is a decent play, even if it's considered a gamble, because if the merger did fail, then warrants would expire worthless. So let's look at a few options that we have. So warrants are currently $1.88 right now, and we're going to use 100 warrants as an example, giving you an upfront investment and max loss of $188. Now, you can use this as like a safer call option because the expiration is years away, and you could even swing trade these individually or 100 shares at a time when you're up and profitable on them, or you can convert these into shares 30 days post merger, making them $13.38 a share. This is because you have to add an $11.50 additional on top of your warrants. Now, the downside risk is losing, $188. And if this thing, didn't go through, your warrants would expire worthless. The upside is you don't have to spend as much upfront. Now, warrants have hit 324 before, and if it were to return to that, you would make a pretty decent profit right off the bat. Now, shares are currently $10.50, so again, using 100 as an example, would be an upfront cost of $1,050. Now, your max loss is only $50 because the shares would be liquidated at around $10. I'll have to check the SEC filing, but that's usually what it is. So that's limited risk, huge upside potential if it takes off. And the downside is you have to kind of put out more upfront cash. $1,050, not everyone has that. And the 52-week high has only hit $11.39 so far. But let's say this thing goes to $20 at the merger. You just made $950 off a max loss of $50. So in my opinion, it makes more sense to buy the common stock right now. And if I had to guess how this SPAC would be received by everyone, I could likely compare it to Rocket, giving it a price target of like 20 to 30 range. And this is not taking into account anything about the valuation or market cap. This is just a blatant guess on how I think people would react to it. Now you got to keep in mind, SPACs are mainly about hype and projections and less about fundamentals. And I do think fundamentals are very important, but when it comes to SPACs, anything can happen, and we've seen it before. So that's pretty much it, guys. Let me know what you think about this one. Please like and subscribe, and have a good one.
Stacking vertical, ooh, counting sideways, ooh, ain't by my cake, ooh, get out my